Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 28th, 2023. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes, your shares, your comments is what keeps this channel going, so please don't forget to do those three actions. I think a 9% move up for stocks is quite possible right now in the next few weeks, and we will explore and I'll tell you what exactly I mean there and why I think 9% is a reasonable number. We'll also look over a trade for a company formerly known as Facebook. Currently, it's known as Meta Platforms. If you're a subscriber, congratulations. Dollar is retesting the lows, and I think gold, if dollars hold support there, gold could rally. I'm sorry, gold could drop from here. If dollar rallies, gold will drop. However, the opposite is also true. I'll explain what I mean. Oil at critical support. It's possible that oil will break through it, and we might see a new low for oil for the move. If you're a subscriber, stay tuned. We have quite a bit of stocks to cover: natural gas, Bitcoin, Ethereum, Treasuries, various ETFs, emerging markets, Google, Costco, Honeywell, some of the speculative shares that we trade: Cipher Mining, Skynexus, Shopify, Riot Blockchain, Tencent Musical Entertainment, Weight Watchers, as well as some of the gold shares like Gold Miners, Royal Gold, and Kinross Gold. Again, please don't forget to hit the like button. All right, looking at the S&P 500, I am using interface called TradingView.com. This is called TradingView.com. You can have a free TradingView account. However, if you want my indicator lines, notice on this chart there's this green, blue, red, and yellow lines, horizontal lines. If you need those lines, please follow the link in the description of the video to go to my site, MasterChartsTrading.com. It's a little bit busy chart, so let's kind of look at it without anything yet. So looking at this chart with purely my indicators, notice that up until relatively recently, we were making new lows, and this is a new low here back in October of last year, 2022. And then we started moving slightly higher, moved above this red line back in November. Finally, we came up, touched this blue line right there on the 2nd of February, but we didn't break out above it until relatively recently, until early April of this year, 2023. So at this point, we're going to declare a new bull market. Previous, you can see downward facing arrows. I would call this what are called bear traps. So bears, or people who think that the stock will continue lower, tried to short here, but obviously failed, and indeed they were stopped out eventually. And now we are in a new bull market, new uptrend. How do I know we're in a new uptrend? The only thing I need to know is I need to look at my indicators, and there is the new uptrend, new breakout. It happened right there where I'm hovering on April 10th of this year, according to this chart. For sure, it happened right there where I'm hovering on April 13th of this year. And we were going to say, okay, now we're only thinking about buying. We're no longer thinking about selling short. So looking at this chart, we see that the price over the past couple of weeks, or maybe 3 weeks, starting from actually most of April, pretty much have been trading kind of sideways within this range. So I put in this, the lower part of this range where I'm hovering right now. I define this lower part of this range as a Monday, the 10th of April low right there. And the top of this range was April 18th high, where I'm hovering right now. So a few days ago, on April 25th, on Tuesday of this week, we actually broke below it, and next day on the 26th of April, on the Wednesday, 26th of Wednesday of this week, we continued lower. And I was like, okay, this is not a good sign because we're breaking this range to the downside. However, next day, yesterday, on Thursday, 27th of April, there was a big rally. And today we actually followed through to the upside as well. So I am thinking that this downward move was what you can also call it a false break to the downside. In fact, right now, today on Friday, the 28th of April 2023, we closed very close. You can kind of, I'm going to turn it off. You can see that we kind of ran into this green line resistance. However, looking at this chart, notice that we closed above the previous close of Tuesday, the 18th of April. All right. So technically, this is the highest close since where I'm hovering February 2nd. I'm sorry, 3rd. Okay. February 2nd, Thursday, right there, February 2nd of this year, 2023, we closed still slightly higher than today. Very slightly. So looking at this chart again, I put in this line. So February 2nd high and this green line currently are acting as resistance at about this is E-mini futures, ES1 exclamation point. We can also look at the actual index, S&P 500 ETF index. I'm sorry, index itself, as provided by Chicago Board of Options Exchange. So we're very close to this level. We're currently at 4169. This level, the green line, and the previous high from February 2nd are just a few, not even percentage point away. So we're super close to a new high for the move. Okay, so if you're with me so far, bear with me a little bit more. I'm going to explain why am I spending so much time and why I think this is important. So notice this pattern. Again, I'm going to turn off the everything for now. Notice this pattern from the lows in December. We came up to this high on February 2nd, pulled back, and now again are attempting to break higher above this February 2nd high. So this is what I would call a weird looking cup and handle maybe, or just a bullish continuation pattern. So the depth of this pattern, I'm going to turn on the indicators again, the depth of this pattern from February 2nd until today is about 9% or 360 points for S&P 500. So I think once we break out, close above, when I say breakout, I say close above February 2nd high, it would be quite reasonable to expect a move higher of equal or greater magnitude. This is about 9.5%, 360 points. So I projected this move higher about 360 points. And we're looking at S&P 500 somewhere in the vicinity of 4570 or so. So this is a not even a terribly, ambitious projection, I guess, because if we look more on the bigger time scale, let's say we look at the weekly chart. So far we've been looking at what's called a daily chart. Excuse me. This is a daily chart. Each candlestick is 1 day's worth of activity. Now, if we look at a weekly chart, I'm going to reset this chart. If we look at the weekly chart, okay, this is a weekly chart, meaning that each candlestick is a whole week's worth of activity. Okay. All right. So notice that previous highs were set in January of 2022, a little bit more over a year ago. Throughout this year, we had just pretty much 2022 was a pretty bad year for stocks. Now we're finally trying to move above we're approaching to a degree previous highs. So it's very similar to what I just described on a daily chart, where we have basically a bullish continuation pattern. I'm tracing it out right now. So this is the bottom of this pattern. Then we pull back, trade sideways, and then hopefully we'll break higher. So, and then again, the depth of this pattern is 9%. If we look more globally at the bigger time frame, longer term time frame, we can see that this is actually quite a large pattern, very similar to what I just described. And if we get to new all-time highs, which are currently at around 4,800 for S&P 500, then the depth of this pattern was a bottom in October of last year, 2022, is 30%. That's about 1,200 points or so for S&P. Again, once we break out above previous highs, I think it will be very reasonable to expect another 1,000 to 1,200 point move higher, which would put S&P 500 at around 6,000. When is it going to happen? Once we break out, it will be more clear. But I think once we break out to new records, probably within a year, I would say, it's quite possible. So far with me. If you have any questions or comments, please make a comment. And if you if you have any questions, again, make a comment. So looking further on, looking at NASDAQ right now, I pointed out this exact pattern. This is so we have a move higher from December of last year, more or less a flat consolidation, and a breakout above this flat consolidation that occurred. It already occurred. So here somewhere in March. So we're already above this flat consolidation. Late March, we see a breakout. As far as my indicators, you can see that we closed above my indicator, the blue line right there, on 6th of April for NASDAQ. And that's a signal for us. We went ahead and bought it as well. And notice that I put in this projection on March 16th. So let's see if we get to this. We're already on the way there. So NASDAQ is performing quite well already. It's outperforming. In fact, it already closed at new highs for the move. And this is a February high where I'm hovering right now. And we're already above that level. So that means the NASDAQ is performing quite well and leading the market higher. This is good news for general stock market. This is my position, QQQ. I myself bought QQQ. Now, again, this particular iteration, I was already questioning the whole bear market theory back in, actually a while back. I was questioning it even back in October. Here back in January of this year, I went ahead and I bought QQQ on January 20th at $280. I'm still holding it, but even right now would be another bad time. I mean, we might get a pullback or we might not get a pullback. The way I'm going to show you the next trade, we may not get a pullback. So QQQ is acting, the NASDAQ is acting quite bullish. And once again, this projection is quite reasonable. You can see a move higher from December into February, more or less flat to down consolidation, a breakout above this consolidation in late March, another signal for us to buy when we saw a close above this blue support resistance line. And we're approaching my target right now for NASDAQ. Target for NASDAQ from this pattern is around 14, maybe 15,000 or so. Now I wanted to take a little time to explain how we trade and how do we use my indicators, basically. So notice on this chart, we're looking at Meta. Meta Platforms, also formerly known as Facebook, was quite badly, it was in a downtrend in the bear market. It collapsed. So this is the beginning of a bear market, per my understanding, back in February of 2022. And it basically has been moving lower, making lower lows and lower highs until something happened. We turned around, and right there on February 2nd of this year, it gapped from below this red line to the above the blue line. This was the signal for us. I went ahead and I sent an alert to my subscribers to be buying this, and hopefully people got in. I'm sure some people got in. We traded more or less sideways for a few weeks until we saw a move higher beginning here in middle of March 14th, and then finally, our target was reached somewhere around March 16th. We continued holding, and then finally, yesterday and Thursday, the 27th of April, it gapped up strongly on really, terrific earnings, and also on Mark Zuckerberg's final return to sanity, perhaps, I don't know, as he downplays his ambitions of Ready Player One style metaverse, and concentrates more on Facebook revenue, which is basically what the people want to hear. Also, he's laying off a bunch of people. Not a great sign, rather, if you're an investor, it's a great sign, because your bottom line will be lower. I'm sorry, the bottom line will be higher, but the costs will be lower. Looking at this particular chart, you can see how clear this is. Basically, we're simply buying on close above this blue line. How did I know any of this stuff? I didn't. I mean, there are good earnings, but based on the earnings itself, would I be buying it? Absolutely not. But based on my lines, based on my indicators, I would absolutely be buying it back on February 2nd. And yes, indeed, this is what happened. Hopefully, again, some people got in. And now, congratulations, that's a 30% gain, especially if you were able to get in with options. That's easily a 100% move or more. Switching gears slightly, here's dollar index, DXY. Dollar currency index is currently in a downtrend. Notice this downward facing arrows. How do I know it's in a downtrend? It closed below this red line. That's the only thing I needed to know. Up until relatively recently, we saw a, what do you call it? The index was going higher and higher. It was above the blue line. Something happened back in September of last year. We turned around, had a nice little bull trap. Bull traps happen when you get in on the long side and then security turns around on you. So at this point, we made a low right there on February 2nd, and now we are again very close to retesting this low from February 2nd. So if the lows are taken out, I think I'm going to show it to you on the weekly chart. I think we could easily collapse further for the dollar, and the dollar could easily continue lower. So easily 5% down from here. So that's a dollar currency index. It includes multiple currencies. However, I think, we might retest the support from February 2nd low. I think it's a decent, quite relatively strong support. If we hold here, then we need to look at gold. Gold has been the beneficiary of dollar weakness. We are trading gold. We're long gold. So you can see upward facing arrows here, actual alerts. Right now, it's possible that, if dollar holds support here, dollar holds support right there, gold will rally. Why? Because XAU divided by USD. So if the bottom part of this equation gets stronger, it will pull this currency pair lower. So gold will be under pressure. Most likely will continue towards around 1880. Around 1880. Why? Because that's where the blue line is. I think that will be a great opportunity to buy it again. Right this instant, I want to wait and do nothing, and I want to wait until we get a pullback to buy gold again. And finally, wrapping up with oil. So oil made a low for 52-week low, actually multi-year low here on March 23rd, and then rallied. Notice this gap up from March 23rd to April 3rd. It gapped up, it continued higher, and then pulled back. So that gap was filled on this Wednesday of this year. So what's happening right this instant, notice that we have, notice where the bottom in action is, exactly at the yellow line. So again, my indicators provide excellent support and resistance lines. It's attempting to bottom at this level. If it doesn't hold, then we could easily see a new or the retest of these lows from March and possibly a continuation to new lows. That's it for this week's recap. Again, please don't forget to hit the like button, subscribe to this channel, share this video. Stay tuned and I'll explain what I sell and where you can buy it. So go to MasterChartsTrading.com, one word, click on sign up for one of the products. I have the trading indicators, these trading indicators that you can see on this line, on this chart, this green, blue, red, and yellow line. Again, you can get them. These are great support resistance lines. They're very easy to follow and easy to understand. Again, I also provide training library. So there is videos on training. You can also get a hold of me, contact me, and I always reply quite quickly. So those are the trading indicators. I also send out daily newsletters with various alerts about the securities that we trade. So for example, this week we've been trading all of these various securities. You can see there's quite a bit of various stocks and various securities as well, like Forex and gold. And of course, the best deal is to get both of them, the indicators and the newsletter, is $59.95 per month. And you also get free 7-day trial with any of my subscriptions. Again, thank you for watching and have another great trading week. Bye-bye.